Very good morning, everyone. Charles here of FRGNT Mastery, FRGNTForex.com, and of course, FRGNT Daily Chart Analysis. Now, how do we have it? It's Friday, the 20th of March, 2026, just approaching 7:30 here in Milan. So, pre London Open, just going to do a quick breakdown here on the DXY and use that DXY breakdown and forecast and compare that against GU to see where we lie in terms of confluence. So if we look at simply, first of all, the logistics of a Friday, more often than not, the week will push in a certain direction for, let's say, the majority of the week into those higher time frame order blocks, into those higher time frame 50 EMAs. And then Friday, to be honest, is the rejection of those order blocks and of those 50 EMAs. Then, of course, you can have the inverse, but what we're seeing here is probably what I stated initially. So if we go to that weekly time frame, top right hand chart, you can see on the DXY that we were trending below that weekly 50 MA. Why is that important? Well, last week's candle closed bullish above that weekly 50 MA. And as a result of now trending below it, we are now to expect the rejection of that weekly 50 MA towards the upside to end the close of business in around 16 and a half hours. So how does that look on the daily time frame? Well, what we can see here as well, if I just backtrack ever so slightly, the importance of that weekly 50 MA is that price was respecting it to the downside. So every time price came close towards that weekly 50 MA, price rejected it and it continued to fall short, or at least it continued to range, is what we can see here on that weekly time frame. Now, as a result, as I said, of last week, we had that first close above. So again, just to repeat, we're expecting price to return back to it, find the imbalance below, and then close above that weekly 50 MA. So that's spoken about. Now to the daily time frame. Let's see how most recent price action is being respected. Of course, here we can see that's the weekly candle closing above that weekly 50 MA. But the importance also, we are finding that daily price action is also closing or is also respecting the EMA towards the upside as well. So that supports the theory in terms of weekly strength and also looking for continued longs using that daily time frame as well. Now we can see the imbalance left behind on the daily time frame. We have a larger order block here that I haven't highlighted simply as a reason for just using the lowest order block that we can find and then looking to refine that down. But nevertheless, market conditions may react to whatever it sees fit. So if I was to just pop that weekly order block to there, although it's been mitigated by this candle, price is still respecting it and of course failing to break and close below. That's the importance. But for a minute, I shall put that just a little lower to there. We've refined that order block down and we'll move now to the 4-hour time frame to see exactly what or how that lines up. So 4-hour time frame, that's where I'm looking at price action in terms of direction and also all of the same that we've just spoken about. So quite clearly here on the higher time frame, or rather on the 4-hour time frame, we can see the price is making higher highs, higher lows, higher highs, and perhaps now price has tapped into that 4-hour order block, all which is refined from the daily and has now made its higher low for a potential higher high. So in the lower time frame is going to be looking for a pullback into imbalance left behind as a result of these most recent moves on the 4-hour to see if we can finalize or rather jump on that final move, as price will look to reject that weekly 50 MA towards the upside and potentially then create what could well look like a higher high on the 4-hour time frame. So we then use all of that information, bring that down to the 15-minute time frame to see exactly what's going on. So as we can see, that's the 4-hour order block that price has tapped into on the 4-hour time frame. Remember, on the 4-hour time frame, we've made that higher high. This is now potentially the higher low to now make this higher high leg. However, of course, within that higher time frame leg, we will have a trend on the lower time frames. So that's what we're looking for, to see if price is going to pull back into those imbalances before continuing on in its upward trend on the lower time frames. Right, so 4-hour order block, that's been refined down from the daily. We can see price tapped into it beautifully yesterday, and it's left us not an order block behind on the 15, mind you. However, what we have, if we go down to the 5-minute time frame, we can see as a result of this move that has broken one structure point, we'll say just for a moment, ever so slightly, we can see a 5-minute order block has been left down at the low. So ordinarily what I'm expecting to happen now is once London opens, it's either going to drive price higher, break continued structure points, and then we'll be looking for the pullback into an imbalance before looking for a rejection long bullish on the DXY, and then we'll see how that will correlate across the other pairs. So what I'm going to do initially, just to keep this a very short and snappy video, I'm going to go down to GU to see exactly how that correlates. So just keep in mind that we're expecting DXY bullishness for the end of the day, long term as well, but most importantly, we're expecting a pullback on the DXY, which will look like immediate strength coming out of GU, but I'll explain exactly what that strength is going to look like, and then the potential short that can align nicely on GU. So let's look at GU the same way we look to have analyzed the DXY. Weekly time frame, previous weekly candle closed below that weekly 50 MA. So of course, I have 14 hours and 27 minutes for the end of business today, to hope that this current weekly candle will also find those rejections up at the highs, to then continue the thought process down that this current weekly candle will close below and reject that weekly 50 MA. So that's where we are. The only contrast that we have is we're trending out of a higher time frame weekly order block. That is, of course, providing us with some power, or I should say liquidity, towards the upside on that weekly time frame. And as I've mentioned in FRGNT Mastery, to be quite honest, I don't know which has the most strength, being quite honest, whether it's the weekly 50 MA to push price down, or whether it is the weekly order block that's actually going to have the liquidity to push price up. However, using the DXY, it would be quite clear that the DXY is bullish, therefore that should drive price lower on GBPUSD. So keep everything in mind. Now, that's what we have on the weekly time frame. Down to the daily to see if we can find a bit more of a clearer picture. Look at the daily 50 MA. Price is respecting it perfectly of most, I'd say since the 27th of February, as that daily 50 MA has started to come, or as prices started to close below that daily 50 MA, every time we've come back into it, we've rejected it, and we made that lower low here on GU, potentially coming all the way back to have made that lower high on the higher time frames before looking to reject it. What else do we have left behind? We're trading out of to the downside a higher time frame daily order block, and of course supported by that daily 50 MA, where yesterday's daily candle rejected it beautifully, as well as trending slightly above it. Grab the stops, take the liquidity, and then hopefully that will be looking to push price to the downside. Right, so 4-hour time frame, that's where I'm more concerned about structure as well as the whole picture. So using that daily time frame, I'm looking to see really what is the trend on the 4-hour time frame. Now, what we can say is, as a result of trending from, or let's say between, the weekly 50 MA as well as the weekly order block from the lows, what I'm expecting to see is a bit of a hold up on price and not really clear price action on that 4-hour time frame. But nevertheless, what I can see here is a clear low in the market. So what I'll do, I'll retrace that low, and I'll accredit that low, and we'll call this the lower high that created the lower low. So technically, until price breaks above this point, we are still in the downtrend on the 4-hour time frame, in my opinion, on GU. So let's have a look to see how that matters. So we know we're in that higher time frame order block, that's clear. There are not any 4-hour order blocks to the left that we can look to manipulate to start trading from and then refine that. So what I'm going to do is start the process now and use this. As a result of this bearish engulfing candle, we've been left behind a beautiful 4-hour order block that I'll show on all intervals to see where that lies on the 15-minute time frame, to see if once that area is refined down, it would make sense to be looking for a short from that area. What we can say here, however, is as a result of this bullish move on GU, we are now trending above that 4-hour 50 MA. So that initially is going to have to be at least a target, if not a management area, if you are looking for short positions. Now, that's pretty much it, in my opinion, on the 4-hour time frame. As a result of trending out of that higher time frame weekly order block, I'm not going to come to the conclusion that although we're looking for higher highs on the DXY, I'm not necessarily expecting after this low to be created, potential lower high for a lower low to be created. Rather, what I'm expecting, to be quite honest, is a bit of a range until we have a weekly close above this area or a weekly close below this weekly order block for us then to take the pullback next week in line with DXY strength. So we'll see how that amasses. Nevertheless, we'll go down to the 15-minute time frame to see where those points of interest lie and see how we can marry that up nicely with the DXY. So here we are. Here's a 4-hour order block that I've just inserted in. And as I can see at the moment, there is a 15-minute order block just there. So we've already now opening ourselves up to two potential areas in the market where price could look to turn around short from in terms of GU. However, if I'm going to look at this now at GU and ask myself, well, is GU ready for the short position? I have to also refer myself to the DXY and ask, is DXY now ready for the long? What I'll do to give that some confluence is just simply read price action in its most basic form. Higher high, potential higher low that's created this most recent higher high. So here, as you can see, I've illustrated by way of structure points. So what I'm hoping to see once London opens is a break of structure, filling Asia, pull back into an area of interest, which is available, and then I'll look for the short down once confirmation has been met. Now, what's also nice to see is if I scroll out for a moment, if you close your eyes, price came beautifully into this 15-minute order block right there up at the high. So this order block has essentially done its job in terms of liquidity. So after price has tapped into a higher time frame order block, more often than not, what I'm looking for is simply confirmation to look for a short. However, as that happened overnight, or rather out of my trading period, or we'll even call it yesterday, I just want that additional confirmation again. So I'll grab that from the DXY and I'll also grab that from a pair. So that confirmation will be at the moment a solid break of structure on the 15, pull back into an area of interest before looking for the short. So what I can see here is the only 15-minute order block that's available. However, up at these highs, if I scroll down to the 5-minute time frame, what we'll see perfectly is this 5-minute order block right up at the highs. So as always, what I tell FRGNT Mastery, and to be honest, everyone within the FRGNT Telegram groups, is that if you are going to short, please try to short from as high as possible in terms of the order block that you're using. Now, we understand this is not the 4-hour order block that we're using, but in terms of the daily order block that we're using on GU, this is the highest remaining order block that is available in terms of 15-minute or 5 minutes. So the 15-minute has now been tapped. So essentially what I can do is get rid of that completely and focus all my attention on this 5-minute order block. So as it's a 5-minute order block that I'm going to be using, what I'll be waiting for confirmation up at those highs is a 15-minute bearish engulfing candle. That will allow me to restart that process on the 15-minute time frame by way of 15-minute order block, and then I'll simply be waiting for the imbalance to be filled, and I'll be looking for that short position. So hopefully I'll be able to grab that entry criteria as a result of price breaking structure, pull back into the area first and foremost. So if I minimize that chart now, so we can see exactly where we lie, and that daily order block that I was using as well, as a result of that bearish move that created that lower low in the market, that left us that order block behind. Why does that make sense? Well, the daily 50MA is also there pushing price down to the lows. So again, if we're able to have that confirmation by way of DXY as well, what that's going to look like, hopefully if the DXY starts to break its structure point to the high and pull back into the area of interest, what that's going to look like on GU is exactly this. GU is going to break the structure point to the low, pull back to the area of interest, and then we'll be looking for the short. So as always, I'm using the DXY as a good confluence. I would say the DXY is pretty predictable, to be honest. I took 2 losses yesterday using that DXY as confluence. So what I'll do, I'll go to the DXY, just me being Mr. Transparent. We had this area of interest to the left here on the 15-minute, around about here, right? So if I just do it via eyeball, so we were there in the market, looking for a rejection from that DXY up towards the upside, which would have then brought me into a rejection point on GU, looking for a potential short from around that same area. So we had a nice rejection on GU from that area. After that rejection, confirmation took the short, and it's just unfortunate that price went against me there on GU. But nevertheless, using the DXY is a very, very, very great way of getting the confluence as a result of the DXY pretty much being the catalyst in GU movement, as well as, of course, London liquidity pouring into the market. So that's as quick as I possibly could do it on GU and the DXY, using those both as confluence. So pretty much if you were going to do exactly the same on EU, potentially AU as well, even US dollar CAD to a certain extent, just finding ways to ensure that the DXY is ready to make its move. And if you were going to trade the DXY, how would you trade it in line with your standard method across all the other pairs? So thank you very much, everyone, for listening. I appreciate your time and patience as always. And of course, FRGNT4X.com to find out more. Take care. All the best in your trading day. Charles.